And three things you need to know about Silicon Valley, living in Silicon Valley on the real estate side. Five reasons to sell your house now. Insurance companies are abandoning homeowners. And when is the best time to sell a house? All right. First and foremost, I wanted to talk about when rates went up again last year in March, April timeframe. We knew the market was going to crash a little bit. We knew it was going to slow down, right? We knew it was going to go down, and now it's coming back up. And I want everybody to remember this meme. Remember, I'm not paying 7% interest on a more. Well, lots of people are, and they're seeing that houses increase in value all over the place. I understand affordability. I understand it's ridiculously expensive right now, but everywhere you go, things are ridiculously expensive. If you can't afford it, I understand. But if you want to be beholden to a landlord and have uncertainty of how much you're going to pay rent and how much, or if you're going to live there at all, or if you have things that are not working, like an air conditioner that goes out when it's 90, 95, 100 degrees out, I understand. That's your choice. And I understand that 7% is ridiculously expensive, especially for houses that are expensive right now. But people continue to buy houses. That's all I'm going to say. All right. So I don't know if it's ego or fear or what have you, but home ownership rate here is, it's not going down. It's kind of, that's where it normally should be on the arc. I think we're going to see it go up over time. All right. Now let's take a look at all this real quick. These numbers in orange and green, they're just the weekly reports, right? They don't really mean anything other than these are the closes year to date, and this is the volume year to date and the average sales price over the last year to date. And this is the value versus last year's price, which is this guy right here. So see, this adds up. Actually, it didn't this last week, 06. So you can see me do my little calculations now. Here you go. There you go. That's the real numbers, except for this one, because that one's jaded from last year. Whew. One thing I want to point out is Napa. Look, Napa. I think Napa is going to be our first one to fall out of all of these. As far as pricing is concerned, I think we're already seeing a pricing decline. I don't know. I was just looking at this before and looking at all these houses. They're still stupid expensive. There's not the only, I know a lady who works in marketing for one of the wineries. I went to high school with her, right? We're not friends or anything. I just happened to know her. I saw her at a reunion last year, and we started talking, right? So other than the wine industry, I don't know why anybody would want to live here, other than the fact that it's beautiful. It's amazing. Calistoga is gorgeous, right? There's no business, is what I'm saying. There's no venture capital. There's no tech. There's not a massive amount of tech, right? I don't know what industry would be there to support it. So maybe one day I'll go up there, and instead of going to Carmel and doing a little hike, maybe I'll jump over here and take a look at the different markets, the different industries. But look, everything's very, very expensive. So that's probably why people just can't afford it. Versus Santa Clara County, Alameda County, and Redwood County, yeah, San Mateo County. There's industry all throughout here. It's nothing but industry. So at being so far away, maybe that's why it's so much more expensive. Fairfield, Baxterville, Davis, this area right here, probably never caught the wind that this did, because Most of these homes are Airbnb or second homes, people that can actually afford it, right? So when you see houses selling, you're seeing them sell, less of them sell, mostly because there's probably no industry. I'm talking out of hand here. I'll tell you straight up. Maybe I don't know. Maybe I'm full of crap. But just looking at this, and then Marin, same thing. Marin County is probably pretty small though, too, right? Now, I get San Francisco, right? People want to get out of San Francisco, out of the downtown areas. It's not so bad in some of the suburban areas. Contra Costa, Santa Clara, San Mateo, Alameda, we're all doing really, really well. The numbers keep on going up. You're seeing Alameda still selling at 93%. So the most affordable place to live in the Bay Area is Solano. Let's see if I can get that over here. Solano is this area right here, right? The Vacaville, Fairfield. It's because it never caught wind. It never caught fire like Napa did, where people started spending a lot of money. So you're not going to see that kind of contraction there. All right. Let's see. Should I sell my house now? If you're at 2%, you're probably never going to want to sell, so rent it out. I understand that. Unless you're completely underwater in it or you just can't afford the payments, right? I understand. Look, we're humans, right? We make mistakes, and housing isn't a perfect thing, right? It goes up, it goes down. People can afford it. Some people can't afford it, right? If you have an Airbnb and it's not performing like you thought it would, perhaps maybe it's a time to sell it. This is a great time to sell. There's less buyers in the market, but there's also less sellers in the market. And outside of Napa, the prices are holding their own in the Bay Area, right? Now, if you need to upsize or downsize, I understand. That's where you go. It's time for me to sell because it's just time for me to sell, right? Whether it's divorce, upsize, downsize, death in the family, what have you. I understand. That's where I do most of my business. Or you get transferred, or you're selling an investment, Airbnb or vacation property. Your kids grew up and you don't use your lake house anymore, or your Napa second home. Maybe it's time to sell. Just saying. Or you need the money for a cash out, right? There you go. Home ownership rates were going up and down. Let's see, what was the other thing we're going to talk about? When's the best time to sell a house? Yeah, okay. So this kind of goes into everything, right? And that's the second part of this conversation, is when is the best time to sell a house? Here in Santa Clara County, the best time is March, April, May. And then it goes into September, October, November. And then that's the best time, right? That's our local housing season for selling. It's March, April, May is when we sell. We've always been like that. During COVID, it was a wildfire. It was a firestorm for 2 years. So we just didn't have a season. We just kept on selling for a long time, and we didn't have any time off, which is why I'm enjoying this slowdown right now. For me, I'm actually slowing myself down so I don't work as hard. That's regional, right? You could be in, I don't know, St. Louis, Missouri, and September, October, November is the time for you to sell. I know in San Francisco, the best time for you to sell is September, October, November. It's in the fall when kids get back to school. It just happens to be that way. In Santa Clara County, we're March, April, May. What does that mean? That's the best time to sell for whatever. But here's the deal, right? If you go up 5% in March, April, May, it might go down to 4% during the summer. But guess what? September, October, November is going to tick back up. So you don't know. You don't know what's going to happen. And we don't know if the market's going to crash in 3 months, 6 months, 9 months, or a year, or 10 years. We just don't know. So the best time to sell the house is when you're ready to sell it. That said, you can't come back to me and say, back in April, my house was worth $1.6 million. And now, I show you where the numbers are and it contracted, because like everything, it's a living organism and things breathe. Exhale, inhale, exhale, inhale, contract, expand. It's just a normal part of the market. So anyway, there you go. Last thing to be aware of is insurance companies are bailing. Now we have Chubb, Liberty Mutual, and AIG. We knew about AIG, State Farm, and there was another one that bailed out. And it's not just California, guys. It's in Florida too. Places where there's massive weather and natural disasters that are happening. It's going to destroy the insurance companies, and they have to pull out. And I understand where they're going with this. And is it fair? It's not fair to the consumers, but it's just the fact of life. And there's got to be another way of us going to attack this. I think DeSantis, I didn't see anything. This is what I was told, is DeSantis put a moratorium on any company that left. You have to pull out all of their insurance offerings. Meaning that if they pull out on housing, they're not allowed to do automotive or health or business or life or what have you. I don't know a whole lot about insurance other than it's a necessary evil, just like real estate, but it is what it is, right? So there you go. Part of one of the things that I talk about, not here, one of the tipping points that I have not added is insurance. Insurance could very well be one of the tipping points. It absolutely can be, right? I'm thinking it's going to be automotive that starts it, but it could very well be insurance. We don't know, right? And what I'm saying here is we're stacked on a house of cards. Real estate is one part of the massive GDP of the United States and the global economy. So what are some things that could do it, right? All these things right here. Commercial real estate, energy, could be World War III, could be an economic collapse of Europe. It could be a multitude of different things. I'm laying my bets on these 6 things. And the more I look at it, insurance probably is one of those things I want to add, right? Will the market crash? I don't know. I mean, we've been expecting the market to crash for the last 8 years. I mean, since 2016, because when the market crashed the time before that was 2008. And if we know anything about the history of real estate, we were expecting an 8-year cycle. 8 years. So I don't know. 16, 17, 18, 19, 20, 21, 22, 23, 24, maybe next year at the 16-year cycle. Who knows? Maybe we did see a turn down in 16, 17, 18. Who knows? But here's the thing, right? Here's the reason why. Probably won't see a crash. And I'm not saying that we're going to see this or not. I'm just saying these are the facts that I see continuously. There's low supply, mostly because 2.5%, 3% rates. Everybody bought into it that could. And a lot of people bought extra, and then corporations bought. So there's zero supply. There's not a whole lot of supply. Even though you look over here, and then you look at Napa County, there's 240 houses, single-family houses, by the way, for sale. And you can get it for as low as $450,000. Now, this is in a resort area in the mountains, right? It's not necessarily here in what you think of as Napa, in the wine country. This is up in Lake Berryessa area, right? Retirees are not wanting to downsize. I get that, because I don't want to live in a retirement home. I am tempted to look at the villages, but then the villages are $1,000 a month just for the privilege of living there on top of your mortgage and your property tax and your utilities. So I don't know. As of right now, we're not seeing any bank-owned properties. REO is real estate owned, and that's a term that banks use uh, for bank-owned properties. We're not seeing that. We're just not. You know, the whole Bay Area is 32. We're not seeing it. It used to be 3,200, not 32. We're not seeing that. That's not going to happen. Airbnb, VRBO convert to long-term rentals versus them getting it off the market, because Airbnb, VRBO, well, Airbnb specifically makes it really hard for the hosts to do business. They're making it more and more difficult. I see tons of reports all the time of Airbnb screwing over the hosts, the homeowners, not the guests. If the homeowner becomes unemployed, they will rent out the house for, that's a short-term effect. Typically, when you got laid off, you would sell your house and move in with your parents. Again, it would be foolish for you to walk away from a 2.5% rate, right? So that mindset is further reducing transaction volume. We're going to see closer to 5 million versus 6 million over the United States over this year. That's reducing the transactions. A lot of real estate agents and lenders are getting out of the market. They're going to find a job. Investors are sitting and waiting to pick up good deals everywhere. Every day I get calls, and I know people I know get calls from investors bugging them, cold calling them. Right. Okay. I said this 6 months ago when we first, well, about a year ago when we first encountered 7% rates again. I don't think that's slowing us down, but if it gets up to 10%, it could slow us down. The stock market could crash, inflation surges. Although I already said that we're there, and factorially, we're not at 3% inflation. We're at inflation month over month that continuously leads up. So when you're used to paying, I don't know, $3 for a loaf of bread, now you're paying $5. You're paying 50% more overall for everything. Minimum wage continues to increase. More small businesses, small and medium-sized businesses. I see a lot of franchises folding now. I don't know if we've talked about that. I know we've talked about that. Gas prices will remain high. That's just part of life. Sorry. Airbnb, VRBO, and iBuyers oversaturate the market. So if there's a massive collapse of Airbnb or VRBO, and people start throwing those houses on the market, well, yeah, we're going to see oversaturation of the market. And when supply is high and demand is steady or lowers, prices will contract. Economy crashes globally. World War II, famine, everything that the media is scaring us about. You know, we're seeing fires in Hawaii. We're seeing in Jersey, I think there was too. All over the place. There's crazy weather on the East Coast. You just don't know what's going to happen to trigger something that will manage a crash. So, yep, those are the reasons why things could crash. But again, I'm not seeing it happen. I'm not seeing it happen here, other than Napa, mostly because I don't understand the market, right? I don't sell in that area. Let's see if I can collapse this real quick and get there. See, Sonoma, Solano County, right? Solano County, still the least expensive place to live in the Bay Area on the average because it never caught fire. More and more people said, no, I don't want to move all the way over there. If I'm going to move there, I want to move to Napa, or I'll move to Sonoma, or I'll move to San Rafael, Marin County. South Bay is the place to be if you're going to be in tech, which is why you see San Mateo, Santa Clara, Contra Costa, Alameda doing really well. Those are the 3 counties that surround the South Bay, right? You can go to Santa Cruz, but that's quite the drive and very difficult to get through this 880 or 17, depending on who you're looking at. All right. Those are 3 things you need to know. It's Monday, August 14th. Happy birthday to my cousin Chris. Happy birthday, Chris. I'm Vito. What? Hang on a sec. Let me do this proper. I'm Vito with Avatano. We'll see you out there.